I am joined by Tom and Simon. So hello to both of you.
Hi, Gemma.
Good afternoon. We're going to come to you first then, Tom. So let's kick off with what the most significant things are that have been happening in the economies over the past couple of months, because it's been a crazy few years. That I know for sure.
That
We've all experienced that.
Absolutely. And I think when you turn into the new year, it's often easy to think that you're going to have new conditions, new environment, and the reality is, we've seen a continuation of a lot of those economic conditions that we saw in 2022, which was a horrible year. But really, the focus so far this year has been on inflation and the impact of inflation on central bank thinking, i.e., base rates. That's been one of the.
Is that why my mortgage has gone up?
Unfortunately, yes, it is. Yes, it is. So those have been really the main factors, and that will have a big influence on investor expectations going forward. And I know we'll touch on that shortly. Now, at the same time, in terms of the backdrop, what we've seen is a few what we think of as being relatively isolated incidents, but they've caused something of a ripple effect. So more recently, what we've seen has been the failing of SVB, or Silicon Valley Bank, which I know has caused some contagion within the markets in terms of worry around the financial sector, but realistically was fairly self-contained because of the very nature of that bank. But that did cause some concern. At the same time, we saw fallout from Credit Suisse. Again, relatively contained. That's been an institution that has had a number of issues for probably the last decade or so. That's caused some jitters within the market. Main backdrop from an economic standpoint has been inflation and the reaction of central banks.
Okay, so how have the markets reacted to all of that? How's that reflected?
I mean, last year was awful. We know that. For risk assets, for any kind of investor looking at equities, bonds primarily, both saw significant falls in value. We saw something of a relief rally and something of a sort of a return to some euphoria coming into markets early in 2023. Things have leveled off somewhat. We've seen a return to some volatility, particularly within equity markets, and largely on the back of SVB, as I mentioned, Credit Suisse. Earnings season has been actually reasonably upbeat. So a lot of that has fed through. Equity markets have remained fairly resilient so far, and mostly reacting to inflationary news. And we've had a strange situation where what feels like good news is bad news and bad news is good news on markets, largely because strong economic news actually has sort of laid the pathway for an expectation that central banks will stay higher for longer or continue to increase rates, whereas bad news, anemic growth in markets can lead investors to think that central banks will start to moderate and move to a more accommodative position. So we've seen a bit of a return of volatility in markets. Fixed income areas have remained relatively buoyant. Let's not get into the yield curve and what's been going on there, but actually that has been a relatively bright spot in markets.